Hi everyone, welcome back to the channel. Are you thinking of going to university? Or perhaps you've already been? It can be a bit expensive and most people take out a loan to pay for it. In Australia, the standard loan for this is called HECS-HELP or HECS-HELP. It's run by the government and is one of the best loans out there. Unlike most loans, you don't need to try hard to pay it off early, and I'd even say you shouldn't. If you want to know why, I'm here to tell you. My name's Mr Oji and I'm here to help you with some basic financial advice for my students at a high school in Melbourne and anyone anywhere. Please subscribe, like and tell anyone who may benefit from this. Today we have a bit of a shorter video because I've got a lot going on eating up my spare time, but I'm sure it will be useful for those of you who are considering university here. Let's get started. First, if you're watching this, you're probably in Australia as a citizen or permanent resident. And if so, be very thankful because the system we have is actually excellent. I feel bad for our friends in the US as the US college loan system, as with many other systems, is messed up. We don't quite have free education here, as it is in many other countries, but what we have is pretty good to ensure we don't get loads of debt that we can't repay. There are many different loans and courses supported in Australia, but the most common loan is the one for university or higher education called HECS-HELP. This is for Commonwealth supported places. This loan comes directly from the government, is tied to your tax file number, and you never need to actively pay it off because it comes out of your payslips or tax return directly, and it only does so if you earn enough money to pay it back. Just for reference, I'm going to say numbers rounded to the nearest $1,000 because it's easier to follow, but if you want the more precise numbers, they will be appearing on the screen. How much is enough to pay it back? In 2022, you won't pay back anything if you earn less than $47,000 a year. If you do earn that much, you only pay 1% of your income to the loan, up to 10% of your income if you earn $138,000. So you can just keep doing nothing and it will pay off in time automatically. As with any loan, we need to consider the interest for it. Interest is, in a nutshell, how much extra you need to pay over the time that you have a loan. For this loan, it is so low. It's actually indexed to be the same amount as inflation rates, which is the amount that regular prices increase each year, about 2% generally. But Mr Oji, I don't like having debt. Won't it ruin my credit? No, not in Australia. It's pretty much ignored by most institutions because it's such a low maintenance loan. But isn't there any reason to pay it off early? Actually, starting last year, 2021, there is an upfront discount. If you pay $500 or more upfront, the government will pay 1/9 of what you paid. So, for example, pay $900 and then $1,000 will come off the loan. This can be a good option. Beyond this, there's no incentive to pay it off. So if you have less than $500 that you might want to pay your loan off with, why not buy shares or something? I'll just give you one example. In 2021, HELP loans were indexed and increased by just 0.6%, a very low amount because inflation was low. Over the last 10 years since 2012 in total, it increased by 18.7%. So if you had an average loan size, which is $23,000 back in 2012, that would slowly increase with the index to reach $28,000 after 10 years, if you didn't pay any of it back. The only way you can do that is if you didn't earn enough money or you lived overseas like I did. You don't need to pay it back if you're earning nothing here. However, say you instead invested that $23,000 in an Australian shares ETF, which by the way is now really easy to do in small amounts, you would actually get back 9.3% per year on average. This works out to be over $56,000 due to the magic of compound interest. So if you had invested that money, you could then take out $25,000 to pay off your HECS loan all at once, and the government will pay the 10% discount that I already mentioned, then you would have no more loan. But this way, you also get to keep the remaining $31,000 for yourself that you gained by investing your money instead of paying this loan off. Or even better, just ignore the HECS loan completely and continue to ignore it because it will never be better to pay off the loan than letting it automatically come out of your tax return and your payslips every year. And there's one other question I've been asked. What happens to your loan if you die? Well, Amanda, the answer to that is the remainder of your loan after your death is cancelled. You just need to pay what you owe up until you die. It doesn't get passed over to anyone else. More information about all of this is available on the Government Study Assist page, which is linked in the description. Of course, they don't provide advice, for example, about not needing to repay your loan early, so keep that in mind. There we go. It's a nice simple loan and you do not need to pay it back beyond what automatically comes out of your payslips and your tax return. Instead, with the money that you might have used to pay it off, invest in shares or something. And I'll go into investing in shares in a future video soon. So if you like this, you know what to do with the bell and the upward pointing thumb. But most of all, tell a friend. Thanks, and I'll see you next time.